briefly, just to highlight everything we're going to talk about, there's definitely a lot of different things going on in the ASEAN portfolio. And so I wanted to very quickly outline the plan for today's call. We're going to firstly just touch and do a regional macroeconomic overview to understand some of the trends broadly across the five markets. And then after that, we're going to look into the B2C outlook, the B2B outlook, and as well as looking into government spending and key political trends in the region. After that, towards the end, we'll also end up with some suggested actions, as well as save some time for Q&A to discuss any questions, thoughts, comments towards the end of the discussion. So with that, I'll get us started. There's definitely a lot going on globally right now, as I'm sure all of you are aware. A lot of global volatility, different factors at play that are affecting markets in Southeast Asia as well. But what I wanted to highlight from a very broad, big picture level is that ASEAN and Southeast Asia is definitely a region where you will see growth through 2023, and it will definitely be a bright spot amid all this global volatility. So when you're looking at different markets, not only in APAC but even globally, Southeast Asia is definitely one portfolio where you will see substantial growth. And this is in large part fueled by this post-COVID recovery that we are seeing in the region. You have vaccination rates that are increasing, that's allowing people to be more resilient against future waves of COVID. You have high mobility levels as a result, which is fueling that recovery in demand and in consumption levels. And at the same time as well, you have mainly that reopening of borders, which is fueling the recovery of the tourism sector, a major driver of growth in the region. Although, of course, you do have these tailwinds coming into play that are supporting a very broad-based recovery, I do also want to highlight that Southeast Asia is no stranger to the impacts of the different global headwinds that we are seeing right now. When you look at the Russia-Ukraine war, we are seeing that rising commodity prices are leading to high inflation levels across all markets in Southeast Asia, and a mild recession in Europe as well is weighing on growth in Southeast Asia, given how heavily the region is tied into global supply chains. On top of that, of course, you do also have China's zero COVID strategy, which continues to be a problem for growth in the Southeast Asia portfolio. Again, because of just how heavily Southeast Asia is linked to China in terms of trade, in terms of investment levels over the next 15 months. At the same time, of course, one other important, very important item to highlight is that the US Federal Reserve is very aggressively hiking interest rates. And as a result, there is that mild recession in the US that we're seeing that will weigh on growth in Southeast Asia. Not only that, but you do also have extreme depreciatory pressure on Southeast Asian currencies. That's just leading to more imported cost inflation, higher prices, and more pressure on margins and domestic producers. So definitely a lot of headwinds to consider and to account for into your demand planning for 2023. But broadly, what you do need to know is that the tailwinds here from a post-COVID recovery will outweigh these headwinds, and there will be a broad-based recovery. But due to the fact that you still have these headwinds at play, the recovery won't be as quick or as accelerated as we were expecting earlier this year. I wanted to take this opportunity to firstly highlight how each of the five countries are doing just on a broad level by looking at overall levels of economic activity. Although we consider Southeast Asia as a portfolio, there is a lot of variation across the five markets in terms of economic performance. Sorry about that. When we look at the five markets, what we've done here essentially is we've indexed growth levels of economic activity to a pre-pandemic baseline of 2019 Q4. So if you're seeing a level of above 100 here, that's levels of economic activity above pre-pandemic levels. And if you're seeing a level below 100, then that's levels of economic activity below pre-pandemic levels. What you'll notice directly on this chart is that we're expecting all markets to recover beyond pre-pandemic levels by the end of 2023. The star performer in the region, a market that we've been highlighting to our clients a lot as well, is definitely Vietnam, where you will clearly see that once Vietnam moved towards that endemic COVID-19 strategy in late 2021, Levels of economic activity already jumped to well above pre-pandemic levels, as you'll see from the light blue line here, and they've been constantly improving, and we expect that to be continue to be the case through the end of 2023. The two markets here where we saw growth levels be very subdued and the impact of COVID outbreaks be very extreme over the last 2 years was definitely the Philippines and Thailand, which you'll see here at the bottom of the chart. And these markets, given that they've been hit even harder by inflationary pressures at the moment, you'll see that their growth trajectory will be slow, with Thailand in particular only recovering beyond pre-pandemic levels by the end of 2023. So definitely something to count for when you're looking at your demand planning for these five markets, because the pace of recovery really does vary, and the position at which these markets are right now does differ a lot. Thailand, Indonesia, and Malaysia are the two markets here as well, where I would say they're somewhere in the middle of the pack, where they have been impacted by COVID outbreaks over the last 2 years, but a broad-based recovery, reopening of the economy, and easing of mobility restrictions has helped to put these economies on the right path forward. So with that, I'll also quickly just highlight some of the GDP numbers you'll see here. So looking at both, of course, across the five markets, you'll see that in 2022 and 2023, we're expecting Vietnam, as I mentioned earlier, to be the best performing market, followed closely, of course, by Malaysia and the Philippines, with Thailand being the one market where you should expect the lowest level of growth.
Shivang, maybe I can ask a question here. So for companies with a longer term view that extends beyond this timeline you just mentioned, would you say this current prioritization still holds?
Yeah, that's a really good question, actually. So when you look at that longer term view, whether that's a 5 year view or even in fact all the way to a 10 year view, I would say that Vietnam is still one of the markets where although in terms of a GDP per capita perspective, it's not one of the largest markets in the region, but in terms of a long-term growth perspective, it definitely is one of the best positioned markets in Southeast Asia. You do have the fact that conditions for manufacturing, the fact that the government support is very strong, and its attractiveness as a location for foreign direct investment will continue to propel it in that long-term trajectory. But at the same time, I would also highlight the Philippines being one of the markets where, in terms of a long-term growth perspective, it's definitely a market worth monitoring. What you're seeing right now, of course, is that in terms of how the Philippines is expected to perform over the next 15 months, it's not one of the top markets. But when you look at some of the growth rates, even right now in 2022 and 2023, despite all of these global headwinds, we're expecting GDP growth north of 5%. And once these headwinds ease, when you're looking at the long-term trajectory, 2024 onwards, for the next 10 years, that growth will continue to improve, supported by very strong domestic fundamentals. So when you're looking at that long-term trajectory, although Philippines isn't a market you'd look at right now in the short term, it's definitely a market along with Vietnam worth considering in the long term.
Hi, my name is Krista Reganey, and I'm the Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.